Hey there. Think I'm live. Hey guys, how you doing today? It's Kara Janowski here with Sandra Accounting. If you don't know me, we are the go-to hemp-focused accounting firm. We're profit focused and we help our clients to get past that early growth phase that is so difficult in the CBD industry. And I wanted to come on here today and talk to you about the most recent updates that have come out of the PPP program. These came out right around the 31st. So just getting this update out there for you guys. Most notably, there is additional funding, as you've probably heard at this point, and the most important factor in order to determine if you will qualify for additional funding via the PPP is that you must be able to demonstrate a 25% decline in revenue from one quarter in 2019 to that same quarter in 2020. So this is the element that is going to be somewhat difficult for some CBD brands. If your brand did really well in April and May, which a lot of you guys did, the consumers were really jumping onto the wellness bandwagon back then. So you may not have seen that significant revenue drop, that 25% revenue drop that other industries have seen. So again, that can be any quarter in 2020. And you have to show a 25% revenue drop from quarter in 2019 to quarter 2020. That's the big one. The second thing is that businesses that were not in operation as of February 15th of 2020 cannot apply. Okay, so you have to have started your business after that date. Similar to round one, the loan amounts will be 2.5 times expenses, times payroll expenses for most industries. There actually is a 3.5 ratio for those who are in the accommodations and food services companies. So talk with your accountant if you think you might fall under those categories to get that higher multiplier and get a larger PPP loan. The average monthly payroll amounts used to calculate the loan can be either 2019 or 2020. This is great. A lot of people actually did hiring in 2020 and saw growth in 2020 as far as operations, so could be a great year to use those numbers. You still will need to have 60% of your forgiveness costs used for payroll. So in order to be forgiven, 60% of your expenses will need to be payroll-related expenses. You also will need to have less than 300 employees to qualify for this next round of PPP. And this is really cool. They finally added a special stipulation, $15 billion specifically for live venues, independent movie theaters, and cultural institutions. So if you run a community-oriented facility, definitely consider whether or not you might qualify for those special funds. There are also some special circumstances for farms and live performance venues. Okay, and now we're going to talk about the tax treatment for loans 1 and 2. So this is PPP loan round 1, which happened last year, and possibly round 2 if you're getting that this year. The big winner of this legislation that came out was that the PPP loans will not be taxable income upon forgiveness. This was a huge hit that was causing a lot of concern among taxpayers that they were going to have to pay income tax on the forgiven loan via not being able to deduct those expenses. And the expenses are now tax deductible, meaning you will not be seeing an income tax bill on forgiven loans as long as the expenses are deducted normally. The next piece is that the EIDL advance no longer reduces forgiveness. So if you got the PPP round 1 or round 2, in the past we were told that the EIDL advance, which was the economic injury disaster loan, you may have gotten a grant or advance with that loan. And, in the previous legislation, that would have resulted in a reduction in your forgiveness, but that's not the case anymore. They have since said that the EIDL advance will not affect your forgiveness amount. So another great win for taxpayers with this updated legislation. And the next thing, so we've talked a lot about the simplified forgiveness and what that looks like for companies that are smaller and receive smaller loans. As of the end of December, they had already issued an easy form, but companies were finding that was still a little bit complicated. It still required quite a bit of information and evidence to demonstrate. And now it has been simplified to a one-page application for loans under 150,000. You'll have to provide a description of the number of employees that you were able to retain as a result of the PPP loan. You'll also have to provide a one-page certification, basically, that you use the loan proceeds as intended and as agreed upon. And you'll have to provide the estimated total amount of the loan spent on payroll costs versus the total loan amount. So they're going to be looking at the operations versus payroll in that segment. So this is great news. The forgiveness applications were starting to be accepted by banks as of the end of 2020. We were recommending that folks do not fill out forgiveness applications until this legislation passed for exactly this reason. If you work with us, we'll be filing forgiveness in approximately February once banks are able to adapt to this updated legislation and get new forgiveness applications out there. The next win from the updated tax treatment for this PPP round 2 is that non-for-profits are now eligible with certain stipulations. So my firm focuses on CBD accounting. They're not typically nonprofits. We don't typically work with nonprofits. If you are one, I highly recommend you consult with a nonprofit accounting specialist to get some of these funds. The PPP round 1 was a life changer for so many people. It enabled them to continue operations without going significantly into debt because some of that or all of it may have been forgiven if they used it appropriately. So I can't say enough my recommendation to explore this option as we go into PPP round 2. The final segment here for today is an expansion of the use of funds allowed on the PPP loans 1 and 2, as long as forgiveness has not yet been applied for. So if you haven't yet submitted that application to the bank and therefore the SBA, you can take these additional expenses as part of your forgiveness. So most business software and cloud services that are essential to business operations, right? This is things like your QuickBooks subscription, your ERP system, your time clocking system, any type of digital system that's required in your normal operations will be part of forgiveness at this point. Covered property damage costs that were related to the social disruption that occurred in 2020. So if you have a facility in one of those areas that had the protests happening and your property became victim to any type of property damage, you can now include those costs to repair in your forgiveness application. Supplier goods that are essential to operations at the time of the expense, including orders and contracts initiated prior to the covered period. So if you work with a supplier for monthly deliveries for 2020 and you agreed to that in December of 2020, you'll still be able to include those monthly costs in your forgiveness application, even though that contract was agreed earlier in the year. And finally, worker protection expenses, right? Every company that we work with has made investments in personal protective equipment, and those types of expenses will be included in the forgiveness, particularly if they were to comply with guidance or requirements by the CDC or local jurisdictions or any other entities beginning on March 1st. Some of the common expenses that you'll see in this category would include sanitation, social distancing, so putting the stickers on the ground to indicate where your customers or your workers should be standing as far as 6 feet apart, and any other worker or customer safety requirements. Physical barriers, those plexiglass barriers, if you installed one in your store. ventilation, drive-through windows, anything that was for the purpose of physical safety in the COVID epidemic will now be applicable to your forgiveness application. I have one more note that EIDL loans are also going to be coming an additional funding round. Yes. So the EIDL loan was non-forgivable, right? So that's the economic injury disaster loan. This was sort of a secondary option for those who the PPP may not have covered all of their required costs throughout their impacts from the pandemic. So the EIDL does have additional funding as a result of this legislation. So thanks for watching. I hope that you found this valuable. Here at Sonder Accounting, I'm really passionate about driving CBD brands into the light beyond that initial growth phase that can be so difficult to get into the profit generation stage, and to the point where you're building lasting wealth and legacy through your CBD business. So if you're serious about growing your CBD or hemp business, make sure you check out our book. It's the top 10 financial mistakes that hemp business owners make. You can find that at 10mistakes.sonderaccounting.com. And we're also here on Facebook at Sonder Accounting. So be well, grow smart, and we'll see you next time. Bye.